Hey everybody, this is Ryan Mallory, and we're going to do a stock market year in review and a stock market projection for 2021 and stock market outlook. Where's this market going? Where's it been? And what can we learn from this past year, and how can we apply it to the year ahead? For many, the stock market has gone well beyond our expectations, whether it was for better or for worse. For one, expectations of what we think the stock market should do doesn't necessarily mean that that's going to be the reality. And when those two don't line up, it can really throw traders in flux. But now the most important thing as traders is when the reality is different from what we expect it to be, we have to adjust our expectations. We have to make it to where our expectations do line up with reality, and there's nothing wrong with changing. Back in March and April, when we started to bounce a little bit, I didn't think that the market was going to be able to sustain the bounce, especially not like the way it did. But guess what? It kept on rallying, so I had to change my expectations so that it aligned with reality. Now, one thing that I've remembered for as long as I've been trading is that the stock market and the economy, they don't correlate. What's going on in the economy doesn't always represent a reflection of what's going on in the stock market. And so when you're having massive unemployment and negative GDP, but you're seeing the stock market continuing to rip to new all-time highs, we have to come to the realization that what we see between the economy and the stock market can be complete polar opposites of each other. Now, if you're new to trading and you started trading after March, you probably have this expectation that stocks only go up. But they don't. If you started trading in the beginning of January of last year, you realize that the stock market can go down and can go down in spectacular fashion, and it can also go back up in spectacular fashion. You truly got to realize what it means to buy the dip. And if you're part of that latter group, you really learned a lot about the stock market in just 1 year of trading. You got about 5 years worth of trading experience in 1 year's time. And how we actually view the stock market has radically changed. It's become a lot more like how we view professional athletes and how we do sports gambling. Instead of gambling and betting on athletes in fantasy football or in DraftKings, traders are now making their bets with companies. Instead of trying to figure out if you want Patrick Mahomes on your fantasy team, we're choosing between NIO and Tesla and Apple and Facebook and Shopify or Lululemon. So yeah, it's basically become an extension of fantasy sports and sports gambling. And when sports got shut down and they couldn't make any bets on sports, they came over to the stock market. And that's because they found that it could give them the action that they so very much need. But here's the difference. The market's ruthless. It will oftentimes do the exact thing that you don't expect it to do. And there's no forgiveness whatsoever. So it's important that we realize that the stock market is a risk all in of itself that has to be managed on a daily basis. So with the stock market closing for 2020 at all-time highs, is it overvalued? Should we still be buying? Yes, the stock market's way overvalued. You have 20% of the S&P 500 made up with just 5 companies. History will tell you that when that happens, it's never a good thing for stocks. It's usually the best way to decide whether or not the stock market is overvalued. But does that mean that you just go short the stock market right now at all-time highs? No, because you could be jumping right in front of a freight train. You don't know when it's going to end. But when it does end, it's going to result in a big pullback. But that's not for us to know. And we can trade without having to know where the end is. We just have to manage the risk along the way. So in essence, don't be the hero. A lot of people have a hero mentality of we got to be the first person to short the market, or we have to hit it right at the top. And when in the process of doing so, we get our heads handed to us. You don't want to do that. Now, I find this very interesting is that the S&P 500, the NASDAQ, and the Russell have all taught us very different things. The S&P 500, for instance, taught us that it's important not to necessarily get in at the bottom or to get out at the top, but it's important to experience the meat and potatoes. Now, if you're trying to get out the top, don't worry about it. You don't have to do that. But what you don't want to do is be part of this massive sell-off that happened in late February and most of March. That's what you want to avoid, the big sell-offs. Now, you don't have to get back into the bottom either. Instead, you can let that base start to form like what we saw in late March and early April, and then you start to get in. But there's no need to have to time the bottom. You know what it's basically like? It's like a chicken, right? You have a chicken here. You don't want to eat the head, you don't want the gizzards, you don't want the feet. What you want the breasts, you want the thighs, and you want the legs. But all this stuff on the top and on the bottom, you don't need that stuff. It's just like the S&P 500 or trading or any kind of stock in general. You don't have to get at the bottom, you don't need the top, you just need everything in between. So what do? You just the top and the bottom, and you take the good stuff, okay? But forget about all this other stuff. Just take this part right here. Now, what do we learn through the NASDAQ 100? Let's look at QQQ. What we learned there is that you have to let your winners run. They will run longer and further than you could ever imagine. The NASDAQ blew the top off of this market this year. No one expected it to go up this much, especially after what we saw in February and March. Instead, this became the best performing index that there was. And by using something as simple as a 20-day moving average, you could have got the bulk of the move going from April all the way through late August, simply by using the 20-day moving average and any kind of a close below the 20-day moving average. And in doing so, you would have got the bulk of the move. Now, IWM is a little bit different. It taught us patience. And in the form of patience, what I mean is that it took forever for it to really get the wheels turning. It lagged the market for much of the year. It simply did not want to take off until November, when it went on a 2-month rally that was just unfathomable, going up 30% from the November lows until the end of the year. But you have to be patient. You have to wait for that breakout. And then once that breakout happened and that consolidation finally broke out, that's where you got your entry price on the IWM for the big upside. Now, what's cool about these charts is that I also provide multiple updates each week on my YouTube membership down below. You can just click join and you'll be part of it. And with it, you get updates on the S&P 500, you'll get it on the NASDAQ 100 and the Russell. On top of that, you're gonna get an update each week on all of the FANG stocks. That's Facebook, Apple, Amazon, Netflix, Google. Then I'm gonna throw in Microsoft and Tesla just for kicks and giggles. On top of that, you're gonna get setups every day that I'm following in the stock market. And you're gonna get updates to my master watch list that I update multiple times each week, along with the most fascinating charts that I find each and every day. So make sure to click down below the join button and become part of the YouTube membership channel. So what does all this mean going forward? Yes, we're overbought. Yes, the market could be heading towards an eventual pullback here. What's the number one thing that we can be doing in our portfolio? Well, that would be to protect your existing gains. Doesn't mean that you can't add new long positions to the portfolio, because the market could go up for another 10-20% and not even pull back at all this year. So you have to take what the market's giving you, but you got to make sure that in the event that the market does change its tune, changes its direction, that you're not giving back all of these gains. And I say that because so many people will be caught off guard and they're going to lose everything that they worked for in 2020 simply because they were not ready for any kind of a possible pullback in 2021. 2021 will be its own story. You have a new president, you're going to have a new Congress, you're going to have a whole new list of headline risks. There's going to be new stocks that are going to be coming out. There's going to be new success stories and new failures. There's going to be all sorts of things to keep track of. And just because 2020 was a successful year that forgave a lot of people of some bad trading decisions, doesn't mean that 2021 will be the same. So what's the best thing that you can do? Focus on your trades. Focus on a top-down trading strategy that allows you to evaluate the market conditions followed by the sector and industries, and then try to jump into a good, solid stock that's reflective of your analysis of your sectors, industries, and the market overall. Make sure to focus on the charts. Manage each trade individually. Don't worry about the dollars. Don't worry if you're only trading with a couple $100 or a few $1,000s. In the end, you want to be a good executor of trades that manages the risk, regardless of the amount of money that you're trading. If you follow your rules and you follow risk management guidelines, you're going to be fine in the end. If you enjoyed this video, I encourage you to like and subscribe down below. It means a lot to me. Continue to be able to put out this kind of content in the new year. I want to hear down below, what is your top stock pick for 2021? Is it going to be something like Tesla that's already gone up to $700, but you expect a little bit more? Is it going to be like Apple or Facebook? Or do you think Baba's going to come back? Let me know what your best and top stock pick is for 2021 down below, and I'll make sure to read every one of your comments down below. Thank you guys, and God bless. All this stuff? No, we don't need that. We can just... That does not show.